We start off with the latest chapter in the battle for Warner Brothers Discovery. WBD shares popping 3.5% today after Paramount Skydance beefed up its bid for the media giant, while the $30 a share cash offer stays the same. Larry Ellison, the father of P-Sky CEO David Ellison, is stepping in, personally guaranteeing over $40 billion in equity financing. It comes almost a week after Warner advised its shareholders to reject Paramount's hostile bid, citing concerns over the Ellison family's commitment to funding the deal. Paramount's shares jumping over 4% today. Then there's Netflix, the streaming giant previously reaching an agreement to buy Warner's film studio and streaming businesses, valuing those assets at almost $83 billion. But shares falling more than 1% today, even after refinancing part of its $59 billion bridge loan to bolster its bid for the company. So has Paramount Skydance pulled ahead for the fight for Warner Brothers? And what does it tell us about the media landscape right now? Pretty convincing when Larry Ellison steps in and says, you know what, we'll provide you the information. We'll give you the documents to show you that we've got the funds to backstop this deal.
It's funny because Dan talks about do they have the money with a completely different context, but that came up many months ago. And now he's backing up and saying, guess what, we do. And this makes the deal seemingly it should, well, I don't want to say fall in their lap. It should put them into pole position. But to answer your question about what does it tell you, the importance of content in an AI world is really coming to the forefront. And to me, that's what's exciting. We'll talk about a stock that we've talked about on this show in a few minutes. I don't want to bury the lead, but we'll have somebody come on that talks much more intelligently than I about it.
Yeah, so somebody's going to talk not intelligently about this deal. I mean, when you think about like Oracle and the fact that obviously that's Larry Ellison's company and the stock sold off 45% since they got this big OpenAI deal. And the concern was they don't have the money to fund the build out. Yet Larry Ellison, the founder, and I think he's like CTO of Oracle now, is willing to back. And he's one of the wealthiest men in the world, but to give $40 billion to his kids so he can buy this asset that was literally trading at like a hat size, you know what I mean? Like 9 months ago, it just seems really odd. You think he really circled the wagons around this Oracle thing because this guy just said content in an AI world, right? If they can't build out the AI world, I'm not sure what the content's going to be worth.
Yeah, I think with the relationship with the Trump administration, first of all, I think Trump has played this really down the middle of the fairway. I can't tell who he wants at this point.
Really?
Do you? Yeah, I don't know. Maybe lately. He hasn't said much, but I do think it's going to be an Ellison win, even though up until about a week ago, it was probably 60-40 Netflix's way. There's a good shot that Ellison and Skydance takes it from here. But I think, to Guy's point, it's about content. It's about streaming. That's where the puck is going. Who's going to be the most competitive in 5 years after this deal?
Right.
That's what you have to ask. Which side of the fence? So I'm not sure if Skydance should be the most competitive. I think Netflix might be. But I don't like it for Netflix's stock. I don't like the price action either.
Well, I think it's interesting to see the reaction in Netflix shares in particular today. I mean, declining on the thought that it might lose this, because at first, Julie, it was thought that why would Netflix want this in the first place? And does this signal sort of a lack of growth opportunities of, going forward to the point where Netflix has to reach out and make this deal?
Yeah, I mean, it's never been in their history to be very acquisitive. And so it did feel a little bit out of left field. I think it makes sense when you're able to have this subscriber base that is as large and as deep as theirs to recognize that the opportunities to monetize an existing library as well as an organization that can really put together even more content helps them, be differentiated. But, hell hath no fury like a father whose son's multi-billion-dollar offer has been scorned, right? It's not, and we're sort of acting like this is just the backstop off of, I want a new condo, Dad. Can you co-sign on my loan? Is that all right with you? It's a strange situation, but I actually think that what really does matter is who can get this deal over from a regulatory standpoint. And I think both have good arguments for them. The thing is that it's more problematic for Paramount if they don't get this deal than it is for Netflix. I think Netflix is just fine. They can sort it out. They know how to make content. But I think Paramount is in a lot of trouble if they can't get this deal.